Gabi, thanks very much for joining us. Are you seeing signs that capital flows will revert back to the sort of traditional patterns that we'd seen before?
I think the thing to recognise with this crisis compared to the GFC, for example, is that except for in pockets of the market which were going through structural change anyway, such as retail, the real estate investors haven't really lost any money. They were not over leveraged, and the income that real estate provides has remained really very strong. I mean, many investors may well have stopped in 2020 for a period, may have paused, taken stock, I suppose, taken the wait and see approach at the beginning of the pandemic. We saw the material uncertainty clauses, which I think provided a bit of concern around valuations. And the initial volatility that we saw to the downside in equity markets, I think, created a little bit of fear about potential denominator effect and becoming over-allocated to real estate. But those fears were really short-lived as markets rebounded pretty quickly, particularly with the announcement of vaccines coming along. And really that demand for real estate just rebounded with it and has remained very, very strong.
And in terms of some of the trends that you're seeing among investors, Gabi, I suppose what's the position at the moment?
Investors have, however, been very inhibited by the inability to travel, of course, the inability to underwrite assets, underwrite new managers. And so this really has led to a propensity to domestic investment, and also a wish really to do re-ups with their existing managers who they trust. That's really what we saw a lot of in 2020. But I think the mounting pressure and all of this money in the system has really seen things starting to unlock this year. And I'm witnessing way more willingness from investors to look at new strategies, new managers, new regions, and being prepared to do full underwriting, full due diligence virtually. And I think the question marks that are around some of the traditional sectors, such as retail and even office, has meant that we've seen investors, this wave of investors, really needing to rebalance their portfolios away from those traditional sectors, which has created a lot of pressure on the other two traditional sectors, logistics and residential, for instance, and also a wish to look at some of these more alternative sectors.
Gabi, we hear from fund managers a lot at the moment about ESG initiatives, but what are the investors actually demanding? What are they looking for?
I think another really interesting difference that we've seen in this crisis compared to prior crises is really in downturns in the past, there's been very, very little focus on issues of people and planet. But that has been a massive change this time round. I think despite the upheaval that we've seen in the last 18 months, really it's become impossible to ignore the climate emergency. And really the pandemic has shone a light on social and economic imbalance as well. And the investors are really, really awake to all of this. I think the real estate industry in Europe was already making great strides pre-pandemic in tackling the climate piece of all of this, with organisations such as GRESB really leading the way. But what we've seen in the pandemic is a large amount of managers and even investors coming out publicly with ambitious statements on their pathways and targets to net zero carbon. SFDR, the Sustainable Finance Regulation, has really galvanised even more action in this space.
And in terms of the difference between Europe and US, are you seeing a difference in terms of approach? What's your view on that?
I mean, I must say the Europeans have always been a little further ahead than their US counterparts on this journey, perhaps alongside their Australian counterparts. And we are starting to see European investors in particular using this as a sifting tool, actually, to evaluate funds. So I've seen investors ask for a minimum GRESB 3 on a fund. And I think you will start to see, particularly in the core space, I think, demands for minimum SFDR 8 in the core space in particular. I think American investors are a little further behind in their journey, which in turn means actually that the underlying funds in the US have a bit of a way to go to catch up, as they haven't been focusing on it in the way that we in Europe have been focusing on it.
Really interesting to see how the capital is moving, and also that focus on ESG. Thanks very much for joining us, Gabi.
Thanks very much.